Something moving underneath the silence. You can't stop it, you can't see it.
There's a spark you can't control. No face, no throne, no single soul. No crown, no king, no guarded gate. Just coded rhythm, rewriting fate. They don't trust what they can't hold. They fear what they can't control. But every system once began as something small no one would stand. They laughed at fire when it was stone. Now whole cities glow from what was thrown. Every empire starts unseen. Every future starts a dream.
It's rising, it's breathing through the cracks in the ceiling.
You can doubt it, you can fight it,
but you won't stop the feeling. There's an invisible fire burning under the ground. You can't cage the wire, you can't shut it down. We are rising higher, no walls around. What you can't see now will shake this town. It's burning brighter. No turning back now.
yeah. It don't knock, it flows through cracks. Built by hands that turn their backs. No permission, no applause. No signature from broken laws. They building towers made of glass. I building shadows built to last. They measure worth in what they see. I measure mine in legacy. Call it risky, call it strange. Every revolution looks that way. What they mock today is small. Tomorrow stands 10 stories tall.
It's growing, it's glowing, even when you don't know it.
It's silent,
But violent, and nothing can control it. There's an invisible fire burning through the sound. You can doubt desire, but you can't drown the ground. We are climbing higher, feet off the ground. What you can't see now will turn this world around.
I've been doubted, I've been tested. Watch belief get dissected. Watch fear spread contagious fast. But truth don't break it out last. When pressure don't erase the flame, it only teaches it to aim. And when the dark feels permanent,
That's when the spark turns permanent. There's an invisible fire burning us now. You can't pull the wire, you can't shut it down. We are rising higher, we won't bow. What you can't see now will own this ground. It's burning brighter. We're walking through the fire. No walls can hold us now.
Let's go, legends. Hope you're all having a fantastic day. Let's do a little bit of technical analysis here on the price of Bitcoin. What happened yesterday, the trades we took together as a community. Well, the trades that I took, I'm not sure if anyone else took those trades. But when I look at the P&L shots, it does look like some people's analysis align and they take those little attempts to the up and to the downside. Got stopped out of a long yesterday with profits. Very important for me, guys. And I know I sound like a parrot, you know, repeating myself here on the live streams every time I talk about it. But the most important thing to me as a technical trader is how little I can lose. I always have risk on the forefront of my mind. Always. Risk first. Risk first. How much am I... You know, it's like when I take a trade, I always tell myself, you're going to get stopped out. and I know this sounds very counterproductive, okay? You're going to get stopped out, but with that mentality, I make sure that I don't risk more than what I want to lose. Okay, if I go in with that mentality of I'm going to get stopped out, then sometimes you need to lower that position size, take profits, protect position. Those are the risk components that goes through my mind. So we'll talk about that. But for now, let's start. Remember to smash up that like button if you have not done so already. If you're not subscribed, this is where we do pure technical analysis. And as per the disclaimer, I'm only sharing with you how I approach the market. Okay, and right, so on the Binance perpetual chart where I do my technical analysis from a trading perspective, price bounced at a very interesting level over there. Okay. The point of control for the Binance chart is a little bit lower down. You can see the volume spike over there. But there's also a little volume spike, and that is exactly where price got that bounce. So when I look at the Coinbase chart, well, it's exactly where price got the bounce. Okay, yesterday? That's exactly where the price got the bounce. So you have to remember that these volume spikes are caused by the people trading on this specific exchange. So sometimes the point of control and the volume spikes will be a little bit different, but they are more or less in the same zone because that is the Binance one. Okay, at the volume spike over there, this is the Coinbase one, and maybe when you go to the Bybit one, it will be in a different place, but you will still see similarities from a volume perspective. So I always keep an eye on the volume. And then I will go and check from 3 exchanges, maybe the Bybit, the Binance, and the Coinbase one, where is that point of control? Okay, but you can see here on the Binance one as well, okay, you have the volume spikes more or less in the same region. You have that volume spike on Coinbase, you have that volume spike. Okay, let me just take the scribble here out the way. You can see you have the volume spike on Coinbase, you have the volume spike on Binance. You have those little spike, that little spike over there is where the point of control was on the Coinbase chart. And then also you have this volume spike, same. You guys get the point. That's usually how I look at volume, because volume provides support and resistance depending from which way price action is coming. And I know, guys, here I go, jumping into the educational part of the live stream once again. I just wanted to point that out because it caught my eye this morning, and I just quickly wanted to talk about that. But now you can see where price is struggling at the moment is at the value area high. That is where price is struggling at the moment. You can see we got a rejection there, and then you have these deviations above, but eventually you get back into the range. And usually when price comes from the top and it comes back into the range, you want to see the bounce happen at the point of control or at a high volume spike. Okay, so that you don't get the deviation at the bottom. So if price comes from the bottom, for example, let's say price breaks down here, it's most probably you will get a rejection at the point of control, either get continuation, okay, or it forms that little bull flaggy and for continuation to the upside. So volume is something that you have to pay attention to from a trading perspective. Okay, so now I'm going to dive into, this little structure. Okay, I think that's where I'm going to spend most of my time today, because yesterday I went through all of the higher time frame scenarios. I had a look on the community. Someone posted their scenario. Okay, there's definitely a chance that price could just rally here to the upside. Definitely a possibility. I also looked at this little scenario here on the Coinbase chart that I spoke about a couple of weeks ago. This little bars pattern. Okay, do you guys remember this little bars pattern? For the bulls, this is what I want to see. Okay, and this is where I will get interested in longs. But I need the structure to show me that the bulls are taking control. I need a higher high. Based on the current price action, we're only here, guys. The bears are still in control. Okay, so the bulls have a lot of work to do. Also, the bullish case scenarios does not look great at all. It hasn't been invalidated, but they look dismal. Okay, and I went through that scenario yesterday from a bullish perspective. But if by some miracle the bulls take control and price starts rampaging here to the upside, it just doesn't stop. Okay, it smashes through that order block. I think that's the biggest resistance we have here currently to the upside, is this little order block, this little consolidation. Then you have these tiny ones over here. Okay, but for the bulls to take control, I do not mind missing out on an entire move which I'm already positioned. I'll share the trade now. If it plays out, I'm already positioned. Okay, I will just make money here to the upside. But this is where I will get interested, not here. Yeah. Okay, because after a 5-wave move, 1, 2, 3, 4, 5. Okay, I will keep an eye and I'll analyze the correction. Is it corrective? Is it impulsive to the downside? And if it's a corrective structure like what happened here, I will be very interested to join the next move back to the upside. So I know that I have received messages from people to say that, Devil, why are you so bearish? You and Andy, why are you and Andy so bearish? Guys, I always look on both sides of the token. Always, okay? I am not a perma bear and I'm not a perma bull. I trade the local structures in front of me. Yesterday I took a short and I took a long. I'm a bull and a bear in the same day depending on what price action gives me. But from a higher time frame perspective, for me to have confirmation that we could potentially continue a massive bull run overall to the upside, I have to see this. Whether this is a low probability impulse that's forming here, you know, sometimes the low probability scenarios play out. Okay, I'm already positioned in the long. I'm already positioned in a short. Okay, which can turn into a swing trade. These are my 2 trades that I've got open at the moment. I think there's a high chance for me to get stopped out of the short based on what I'm going to analyze today. I think there's a high chance for me to get stopped out of this short over here. But what's important to me as a technical trader, it's not that I'm wrong or I'm right. It's, did I make money? Did I manage my risk? Did I make more than what I lost? Because that's what keeps me profitable as a day trader. Yes, I did take profits from the short. So if I get stopped out, I'll get stopped out with profits. I also entered this long. I was a little bit late for the long, but I waited for the retest and I saw bullish CVD. And I was like, okay, it's worth a shot. So I entered at the retest over there. And usually when I catch the entry, according to my plan, a little bit late, I'll go in with less capital. That's it. It's just part of my rules. Okay, so now I'm in profits with a long. And I'm in profits with a short. If I get stopped out of the short, the long will give me profits to the upside. And this long, let's just, you know, play this out for argument's sake. If this had to play out, well, I'm definitely going to leave some of that position open. Definitely. Okay. I will be taking more profits as we move up when we hit areas of resistance. And I will be looking for other shorts as well to hedge against the long and so forth. But I mean, you know, wow. If this had to happen, I'm already positioned. So sometimes a day trade turns into a swing trade, depending on how you manage the trade. Okay, I could also just decide to close the trade if I see massive weakness, and I can just close the trade and take all the profits. But it's up to me as a trader to make that trading decision. Okay. So anyways, guys, I'm not saying this is going to play out, because based on the local structure that is forming here, it doesn't look great for a bullish scenario. It's just, you know, I went through that yesterday. So if you want to know the higher time frame analysis, you're on the 4-hour time frame. I went through all the scenarios yesterday. So what I want to spend time on now is just to discuss this local structure, and more specifically what is happening here more locally. Okay. So price is at the moment at resistance. Okay, so one of the first shorting opportunities that I will keep an eye on is grabbing the liquidity above that high. So if price comes back up, it fails. It grabs the liquidity. Okay, you have the range high there as well. It grabs the liquidity and it fails. It starts trading back below. That's a sign of weakness. So I will attempt a short, grabbing the liquidity above the high. You can see based on this price action over here, there's not much happening there. There's not much happening. From a price action perspective, your resistance lies in that little consolidation area. So if there's no reaction and price is above my area of interest, it's no trade for me. unless I have a specific SFP level that I can pay attention to and I can get in with great risk management. If I can't get in with great risk management, I will skip the trade. Okay, and I will keep the community up to date if I do enter a fresh trade here to the upside or to the downside. Okay, so if I'm going to get stopped out of the short, well, then I'm going to look for a new short. Definitely going to look for a new short. I'll just leave the long so it can go to the upside and hedge against my short. And that is how I like to trade. If you want to be part of the community to benefit from the updates during the day, okay, DM me the word access. Here's my Telegram, and I'll send you the instructions to join the community. Because that's obviously where all the action happens, okay? And I can also take you through what happened yesterday here in the community. Why did I jump into a long over there, okay? And just basically take you through what happened last night in the community. It was a very interesting range low, and I spoke about the range low yesterday in my live stream as well. Do you guys remember the range low? What a beautiful trade. I know it didn't play out, but I still made money. Okay, I wanted price to go higher, but I still made money with that trade, and I'll explain it here on the chart in a moment. So let's clean up the mess. Let me take this out the way. Let's zoom into the 15-minute time frame. Now let's look at this structure. Okay, so as per yesterday, just as a little bit of a refresher, and remember to smash up the like button if you guys do enjoy the education and the updates here in the morning. Okay, is that from a bull market? Yeah, that is a 5-wave structure to the upside, that bars pattern. Okay, hello Devil and Legends, I hope you're all doing well. Welcome to the live stream. Really appreciate you popping in here. 2-hour time frame zoom out. 2-hour time frame zoom out. Yeah, that was done on the 4-hour time. Was that? Yeah, that was done on the 4-hour time frame. Okay. From what time frame is the blue chart? Oh, the bars pattern. Let me go check, guys. It seems that everyone is very interested in this bars pattern. Let me go and see where I took it from. It was this one. It's this one. There's the bars pattern. It's an impulsive structure, so I just took it from here. I just wanted, I specifically only chose this one because I want to show people what needs to happen for the bulls to take control. And this is an impulsive structure. Okay, it has 5 waves inside of it, and it's actually a multi-1-2 structure. That structure is actually a 1-2, 1-2, 1-2, 3, 4, 5, 4, 5, 4, 5. Very impulsive structure. Okay, and then you have the correction. It either ended there and you correct it, or it ended there. It doesn't really matter to me, but that's what I want to see. For the bulls to take control, that's what I want to see. And most importantly, you want to make a higher high. You want to change market structure on the larger time frame, because at the moment we have lower highs, lower high, lower high. We still have a lower high. Even if price shoots up here, we still have a lower high. And until such point we have lower highs, the bears are in control. So it's not because I want to be bearish. The price action is bearish. There's no change in market structure yet. You have lower lows. You don't have a higher high yet, so how on earth can you be bullish from a larger time frame perspective? Until you have the higher high, then you can say, okay, now it starts looking interesting for the bulls. But I need the higher high. Okay, people want to start turning bullish over here, and then when price gets there, they like to say, I was right. I don't give a crap, guys. I literally don't give a crap if you were right or if you were wrong. Did you make money? That's my question. Did you make money? If you were right, did you make money? Because a lot of people try and prove points of being right or wrong, but they're not making money with their portfolios. So do you get the satisfaction of being right or wrong? Or are you actually putting your money where your mouth is? Okay, and I know I always hammer on that point, guys, because I get a lot of personal messages from people, and also after, the live streams there, people like to rip you apart. I don't play the game of whether you're right or wrong. I play the game of did you make money? Because that's more important to me as a trader. Because I can be wrong and, like yesterday, still make money. And if I'm right, I make a lot more. Okay, so that's a little bit of my rant. Let's get that out the way. So now the question is, guys, this can either be your 1, your 2, okay, your 3, your 4, and your 5, just as a little bit of a refresher of what happened yesterday. And all of this can be part of a corrective structure. Okay, this is now the most bearish case scenario. Bears, you preferably do not want to take this high unless it's going to form a larger corrective structure. Okay, so you have your impulse, you can maybe label this a A, you now have your B, and you want to go down in a C. Okay, the local structure does not look great for this scenario, because what has happened here does not look great, because if you're going to fall down in a C, it's very difficult to count an impulse to the downside based on what is forming over here. Okay, what is starting to make a little bit more sense to me is that 4 moves over there, 5 moves down here at the tippy bottom, and then this is all part of 3. Okay, you could move 4 there as well, whatever your heart, I'm not going to argue about where you move 4. I'm not going to count the structure in detail. I don't have to. Okay, but what's important is this is where it started and this is where it's ended. Okay, which means that your correction started from here. So this is all part of the correction, potentially, or an impulsive structure to the upside that's going to take us to higher levels. So it basically means it doesn't matter what happened here. It is this that's the most important to determine, do we have a higher chance to move up and take the high? Or is this going to be a corrective structure and we're going to fall down and take the lows, maybe even $60,000? Okay, so now let's zoom into this little structure. I am on the 15-minute time frame, and there's a couple of scenarios that could play out over here. But maybe before I get into the Elliott wave scenarios, nice visualization, Devil. Pleasure, man. Tap the like. Great to see you, Devil. Mr. Nico, always in the house. Mr. A Trader, I always appreciate the moderators supporting me here on the channel. And patron traders would say that's inverted head and shoulders. Yeah, guys, if you know me well enough, the people that know me well enough, that's been following me for a long time, they know that there's one pattern that I hate the most, and it's a head and shoulders. I hate them. Okay, I really hate them. I know how to trade my structures, and whether it's a head and shoulders, I don't care, because there's so many head and shoulders that gets faked out because people place them in the wrong place. So it's not that I hate the pattern, it's just people overuse them and they put them in the wrong structure. Okay, or they use them in the wrong place. It's like bull flags. Bull flags and bear flags you play in a wave 3 and in a wave C. That's where you play them. Head and shoulders you play when the impulse is starting to end. That's where you form your head and shoulders. Reversal patterns like Gartley patterns, bat patterns, harmonics, okay, they also form at the top of a structure and at the bottom of a structure. So if you know where to put your patterns, you will trade them successfully. And I think that is why pattern traders struggle, because they try and play patterns where they're not supposed to play those patterns. And I think that's the power for me from an Elliott wave perspective, because I know when I look at a structure that is absolutely falling to the downside, okay, and it's coming to an end, that is where the reversal patterns takes place. That's where you start looking for reversal patterns. That's where you get the head and shoulders, inverted, normal, doesn't matter, depending on from which side or direction price is coming. Your bull flags and your bear flags, you play them inside of your wave 3. So once you have 1, 2 and price starts falling to the downside, that's where you have your little bull flags, okay, or bear flags. That's where you play your patterns. So you play them in your impulsive structures. But guys, yeah, it's going to take me a while to explain all of that from a pattern perspective. But patterns do work. You just need to know where to place them and where to trade them. Right, so now let's dive into the structure. A couple of scenarios before I dive into Elliott wave theory is that, well, for now, price has broken out of that little trend. Okay, let's just keep it simple. The reason I know that a lot of people will not take this trade is because the low is very far away. And often that's what the market makers like to do. They give you a little breakout, and now you sit there as a trader and you think to yourself, shit, this does not make sense to me from a risk to reward perspective. Okay, if I'm placing a trade here, building a position, I mean, that doesn't make sense to me. I'm risking more than what I'm potentially, because you're always, from a trend line perspective, your final TP area is always at the high. So that versus that doesn't make sense. So a lot of breakout traders will not take the trade. Yes, it can go to higher levels, but you're not guaranteed. So if you follow the rules of the strategy, you're not supposed to take the trade. If you want to gamble and just, I don't know, it's up to you. Or you could be a trader that says, okay, well, I'm willing to take that knock. And I'm going to leave some open for higher levels. The risk reward to me is still not pretty, but I mean, there's some bullish signs over here. So all I'm trying to do here is to point out the bullish signs, and this is why I'm already positioned. I'm already positioned there, okay, as per the trade that I've shared. Now I don't have to worry about the breakout. Thank goodness, okay, and it's not time for me yet to add to this position, because when I see a sign of strength to the upside, I will add to this position to maximize profits to the upside. But I will keep the community up to date. DM me the word access, like I said, to my Telegram, the link down in the description. I'll send you instructions. But it's not time yet for me to add to the position, because I know this is a very good area for me to have my stop loss. So I don't want to now add to my position, dragging my entry up. And you guys know what happens sometimes. It fakes out and then it continues and it stops me out of the trade. And you're like, damn, my stop loss was too tight. So I'm very happy to keep my stop loss in this zone. So if it wants to do its little fake out shenanigans over here, okay, then it must do it without hopefully stopping me out. So first bullish sign is price is trading outside of the trend. We also have a daily level that was formed yesterday, and price is currently trading above this daily level that was formed last night. So on the daily time frame, just to show everyone, where do I get that daily time or the daily level from? There you go. Yesterday open and close. Price is now trading above, which is usually a bullish sign for continuation. Unless, okay, if the bears start stepping in and price starts rejecting and it starts trading back below the daily level, that will be a sign of weakness. But remember, I can only do analysis based on the current price action that I see in front of me. And based on current price action, price is above, which is bullish. It's above the trend. It's bullish. So it looks like the bulls wants to step in and push price a little bit higher. Okay. Which means I'm going to get stopped out of this short, most probably today. If not, and I get stopped out of the long, well, then I'll make more money from the short. So I'm positioned either way. And also, if I do get stopped out from the short, I've already taken profits. That's what's important to me as a technical trader. It's not just, hedging and hoping that one gives you profits. No, I'm hedged and I've got profits on both already. That's just how I like to trade. Okay, so that's where I get the daily level from. So without diving into Elliott wave theory, well, there's some bullish signs here at the moment. Maybe it's going to go a little bit more sideways. Maybe you're going to get that fake out, stop out everyone, and then you get the blast off to the upside. It really does not look good for the bears. Okay, yes, guys, anything can happen. I know anything can happen. And please, I'm not saying that price is only going to move up. It just doesn't look great for the bears here at the moment because of how deep these retracements went compared to that pivot. Okay, something that I want to look at also is that when I take a fib from the high to the low, you can see how deep this retracement went. Okay, you have tapped the 0.88. From a Fibonacci perspective, usually when price taps the 0.88 from two pivots, it increases the probabilities that you're going to take the high. So now you guys can see how the bullish signs are starting to line up. You're trading above the daily, you're trading above the trend, you tap the 0.88, so it looks like the probabilities are higher to claim the high before we fall down. And it literally could be that. It claims the high and then it falls down. But that's what the probabilities are showing me at the moment. The probabilities are higher to at least claim the high. Yes, it can absolutely rocket here to the upside. Okay. And then that will obviously be more profits in the bag from a longing perspective. So my trading plan for this long that I'm in here at the moment is I'm going to take more profits as soon as we get above the highs. That's where I plan to take a little bit more more profits. Okay. And obviously we can now go and see here to the upside, well, what can happen here to the upside, okay? Because there's two very interesting levels that I want to discuss here to the upside where I'll be looking for shorts once I get stopped out of the short that I'm in at the moment. Okay, if price falls, remember guys, if price falls for whatever reason, okay, and it invalidates all the bullish signs, I'll make more money from the short and I'll get stopped out of the long. That's why it's important for me to be in that hedge position at the moment. And that's sometimes what's great about the hedge position is that you know it doesn't matter which way price moves, you're going to make money. Okay, but it's not always easy to get into the hedges, and I don't even catch them all the time as well. Okay, so now let's go through the Elliott wave scenarios and let's discuss what could unfold in front of our eyes. Okay. Where did I save? Most bullish. Okay, let's talk about the most bullish scenario. Most bullish scenario is that the impulse came to an end over here, and now we have formed a wave 1 here to the upside. This correction is a wave 2, and now we are gearing up for wave 3 here to the upside. In this scenario, which is the most bullish case scenario, I would like to see at least the 1.618 tapped, which basically means you're going to take the high for wave 3. Okay, then you get your 4 and you get your 5. After your 5 wave structure, you expect a correction. A, B, C. We'll analyze that once price gets there. Okay, that is also an opportunity for a short once you claim the highs, because this could turn into an A, B, C, and a C wave also has a target of the 1.618. So I always like to short the end of a third wave because I know it can be a wave C as well. And if it's a wave C, you fall down. If it's a wave 3, you want to see a 4 and a 5 and get stopped out. Because once you have the 5 wave to the upside, now that is the most important structure that I will analyze to say that, well, is it going to form a higher low and continue, or is it forming impulses to the downside and I'm looking for a short to ride the momentum to the downside. Okay, but I mean, there's still a lot that needs to play out. Okay, but that is the most bullish case scenario that I see here at the moment, is that price has formed a wave 1 here to the upside. Okay, and in the most bullish case scenario, I would like for wave 3 to at least tap the 1.618, which is the most common target for a third wave. Basically, you take your trend-based fib from the low to the high to the low, and that's how I get these targets. Always a lot of education inside of this live stream. Okay, and I know everyone watching here right now, 200 and let's say 300 people. Okay, I hope I'm giving you your daily dose of education on how to approach the markets so that one day you don't have to watch me anymore. Okay. Because it's not just about signal, guys. I mean, there's many channels that will tell you, enter here. There's signal Discord channels. There's many of them out there. Signals channels, Discord channels. I mean, I used to belong to some of those when I started out as well. But no one really taught me how to do this properly. I had to learn the flippin' hard way to do this myself. And then when I started a YouTube channel and I discovered Andy, by the way, throughout the years I discovered Andy as well, and I said, hang on, here is someone that actually shows you how to do it properly. Okay, so that's your most impulsive structure. Okay, and this is why I am in a long, because I know that this can happen. Okay, what if everyone is expecting price to make a lower high and absolutely tank to the downside, and then what happened? Price just exploded. You guys know market is unpredictable. Anything can happen here. Maybe there's a lot of people piling up shorts here. They see the impulse to the downside. It unfortunately does have a higher probability to form a corrective structure and continue momentum to the downside. What if the market makers are like, no, screw them, let's go first stop them out and let's then fall to the downside. Okay, so let's move on to the next scenario. This is a scenario that I highlighted to say that, well, what if we don't take the high? Or this is basically the ABC that I've just discussed as well. Okay, but remember guys, it's exactly the same scenario as the most bullish. But if this is a corrective structure in an A, B, C, okay, the minimum target for your C wave is the 0.618. It is rare for a C wave to tap this target and fall to the downside, but it can happen. But it's rare, doesn't happen often. Most common target for a C wave is the 1-to-1 extension. And then yes, unfortunately a C wave has many targets. Those are your targets for a C wave. All of them. I'm just trying to discuss with you probabilities. The probabilities of getting a rejection here and falling to the downside is low, but it can happen. There's a higher probability to at least tap the 1-to-1 extension, which is the most common target for that little C wave. Okay, but these are the levels that I will be keeping an eye on. Okay, if price continues to move here to the upside, these are the levels that I will keep an eye on from a swing failure perspective. And sometimes what happens is I can attempt a short at every single level and get stopped out with profits if I'm wrong. So maybe price, okay, does the following. And guys, it takes experience. It's not easy to do this, but after 1,000, 5,000, 10,000 trades, it gets easier. Okay, I can have multiple attempts. Ching, 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 ching. And maybe with some of them I'll take a loss, but with most of them I'll get stopped out with profits. Because maybe price does this. Ting. I'm in, but I've made a little bit of profits. I get stopped out. I'm in. You guys get the point. As long as there's a rejection and price falls a little bit to the downside, I can get in and get stopped out with profits, and I can have an attempt at every single level. But there are two levels that I'm very interested in. So I might not trade all of them. Okay. And the two that I'm the most interested in is when I take a fib, because now I need to build confluence. I take a fib from the high to the low. Okay, let me switch on my stuff. I already did it there properly. No, let's not do that. Let's not do that. Let me do this fresh because I just can't see the pivots properly. Okay, let's do that so I can see that pivot. Take a fib from the high to the low. Okay, now you already have a little bit more confidence because you now have Fibonacci levels that's aligning. Okay. The 0.618 aligns with the 50%, but the 50% has already been tapped. So maybe the next level is the 786 together with the 618. Okay, so in that zone. The next level at the 1-to-1 extension is at my favorite Fibonacci level, okay, which is the 0.7. And there's not a lot of traders that look at that level. And I have many times seen the rejection at this level because they're all waiting for the 786. And then it front runs the 786 and it falls to the downside. Okay. Now, when I switch on some levels, let's put on the weekly levels. Okay, I don't need the monthlies. Point of controls, daily levels. Now, this is where the picture becomes even more interesting. So let me take this one out the way. So technically, looking at this in structure to the downside, okay, you have a weekly level together with a 0.618. You have a 786 with a weekly point of control. So technically also the 88 together with the daily level. So you have some confluence there to the upside. And those are the areas that I will be looking for a short. And if I do attempt a short at one of those levels, I'll let the community know. If you want to be part of the community, first link down in the description, DM me the word access and I'll send you instructions. Okay. So in that most bullish case scenario that I've shared with everyone, okay, I know that there's a big chance or a high chance that it's not going to play out. So I will be looking for shorts against or to hedge against my long. Because After a 5, and this is the danger of a 5-wave structure. After a 5-wave structure, you could form an A, B, C, and you could reject. And you basically form a lower high, and then you fall in a 3rd or a C wave to the downside. I don't care if it's a C or a 3rd wave, they are amazing to trade. And if you miss the short, that's where the bull flags or the bear flags, because price is now falling, that's where you're going to get the little bear flags to the downside. So that is where I will scalp the bear flags as well. That's where I use the bear flags. It's in a 3rd or in a C wave. Once you get the rejection, that is where I trade bear flags, not here. No, I don't trade bull flags here. Okay, so I know from experience where to use patterns from a trading perspective. Okay, let me take the scribble here out the way. And okay, so most bearish, because now that's the question. Someone asked me this morning, Devil, what if we don't take the high? What if price falls down? It's not great, but it will it's not really a running flat, because B is not a flat, but you get a C that doesn't take the high of A. So I don't know what you call it, a running, a running without the flat. I don't know what you call it, but they just incredibly rare structures. Because the last one I remember was actually a proper running flat, and it was this one over here. Okay, because this is what people are scared of. What if this happens? What if you get this? You do not take the high, and price absolutely just waterfalls to the downside. The thing is, here you had a flat. You had an A, a B, and a C, okay? Or WXY, however you want to count it, but your low took the lows. And now in this structure, okay, I'm not sure if Joan is here in the live stream. Maybe he can give me the word. What do you call it if the C doesn't take the high of A, but B is not a flat? I don't know what you call it. Okay, but I will miss the trade. Well, I will still be in the short if I don't get stopped out. So if I don't get stopped out, it'll still be in the short. If it stops me out without taking the high, well, it is what it is. Okay, happy to miss the trade. Maybe I'll jump into the smaller time frames, and then I'll play the bear flags to the downside. But I will trade it. I will find a trade in there if it aligns with my technical analysis. So, but the probabilities is not high to just fall from here without taking the high, because even running flats are considered rare corrective structures. So that one that I've just shown you that happened in the previous structure above, it's very rare for them to play out. Most commonly you get a normal flat where the B takes the low, the C takes the high, then you fall or you climb, depending on the direction of price action. Right, I see someone deleted your comment. Mr. David Trader 6493. I almost threw your comment here on the screen because I wanted to give you a piece of my mind, but I see the moderators deleted, or you retracted your comment. Okay. Guys, it's not about being right or wrong. Okay. I have explained to you that I'm already in a short and I'm in a long, which I've shared in the community. I will attempt a short. The most interesting levels is I will attempt a short from this level and from this level. And then that is also an interesting level that I will keep an eye on, because I know you could front run this level because there will be a lot of people watching the price action for a rejection, and then it rejects before you hit it. It's a nice front running area because I've seen it many times, guys. If you've spent the hours that I've spent in front of the charts, and some of you have, you will know that usually price front runs in zone that you are keeping an eye on, and you're like, how did I miss it? It usually happens at the 0.7. So I'll keep an eye on that. Okay. It also aligns with a Fibonacci level when you do your Fib pull up here. For a C-wave target, it's the 1-to-1 extension. That is the 1-to-1 extension. Okay. If price falls to the downside, well, that's the only longing opportunity that I will consider. Okay, if something changes in my analysis, that's where I'll just update the community. So I'm discussing longs and shorts. I don't have a directional bias. Depending, I'm a reactionary trader. I'm acknowledging the 5 waves. So from a directional bias, if you had to put a gun to my head, I would say, well, usually after a 5-wave move to the downside, there's a higher probability to form a corrective structure, form a lower high, and continue. So if you put a gun to my head, I will tell you, I think there's a higher chance to form a higher low and fall. But I know that the bulls can step in here as well, and this is why I'm positioned in the long. Okay, but I will be looking for shorts. And hopefully, if I'm wrong, I'll get stopped out with profits. Okay, that's just how I like to approach the markets. Okay. So guys, I know it's a messy chart. It looks very confusing. The last scenario I wanted to discuss over here is, where did I save you? My little WXY, where did I save you? Okay, here we go. Okay, let me clean up the chart. Switch off the levels because I know it looks very, let me clean up the kitchen. So this is a corrective structure. Still, you have an impulse and you have formed an ABC, which gives you a W. You've formed a 3-wave corrective structure in an X. And now you can form an ABC to the upside to complete your Y. And guess what? After an impulse, a WXY is a corrective structure. You form a lower high and you fall to the downside. So at the moment, from a directional bias perspective, there's a higher probability, even with a move up, to form a lower high and continue to the downside. So I'm still more interested in shorts than I am in longs, but I can still take longs during the day, like the one I took last night. Okay, hope that makes sense. Okay. Smash up the like button if you do enjoy the education and the content. I can be a bull and a bear in the same day, depending on how the structure unfolds. Okay. Also, what's interesting about this structure is that this does look very impulsive. Okay. It's either an ABC or it can be a 1, 2, 3, 4, 5. Very short 5-wave over there. Okay. You could also label this a A. But I've already gone through that. This is your B, and now you form an impulsive structure to the upside to complete your C. But you guys can see it doesn't matter how I count it. Whether this is a W, X, Y, or whether this is an A, B, C, it's a 3-wave structure. It's a corrective structure. It's a lightning bolt. The only difference between a 3-wave structure and an impulsive structure, which gives probabilities to the bulls, is that you need to see that. It needs to do that. That's where the bull starts gaining probabilities, and that's where you then look for longs with a retracement. Okay, but 3-wave structures are very dangerous structures. I see them. Okay, I'm not sure if everyone remembers when I showed people this. Okay, let's use the Coinbase chart over here. Let me show you this. Very interesting. When you have momentum in a specific direction, you always correct in a 3-wave structure. Always. Okay, you fall to the downside, you have a 3-wave structure to the upside. You fall to the downside, you have a 3-wave structure. Fall, 3-wave structure. Fall, 3-wave structure. You fall and you could form a larger 3-wave structure here and fall again. For the bulls to take control and to start shifting the momentum, you need that. Once you see that, now you know that the bulls have a chance, because it's the retracement now that becomes interesting to join the next move to the upside. Okay. So, and that's what I'm trying to explain in this structure, is that you now have an impulse to the downside. You do have a 5-wave structure to the downside. You could also say, well, maybe that's your 5-wave structure and this is a A, B, C, and we're going to fall, but now the local structure doesn't really support the momentum to the downside. Okay, but I am positioned in the short if it does happen, because sometimes the market just gives you something you did not expect. Okay, you have an impulse, and for now, okay, this is so far, even up until there, that's a three-wave structure. So that's the danger about the structure at the moment. For now, based on the current price action, there's a higher probability to fall down. Whether it falls down from here, whether it falls down from there, whether it falls down from there, or maybe even a higher, maybe it rejects inside of this consolidation area and it falls down from here. But as long as this leg is, as long as this structure is a three-wave structure, you always have a higher chance to make a lower high and continue the next leg to the downside. Okay. And I think that's why Elliott wave theory was so interesting to me, because without even knowing all the counts and the WXYs, and I know it gets so mind-boggling, the one thing that I really found interesting in Elliott wave theory is the structures. Okay, also look at this. You have a movement to the downside and you have a three-wave structure. You fall again. Okay, very interesting. Corrective structures are unfortunately very difficult to count from an Elliott wave perspective, but this is now basically the last scenario that I wanted to discuss. Okay, and I'll do a summary recap just now, is that this is a ABC and a W. You formed your X, okay, and now you could go up for another A, claims the high, it rejects, and it goes back up for a C. Most common target for a WXY. Okay, now this is where it gets interesting. The most common target, according to theory, is the one-to-one extension. I have seen that a Y wave loves the 0.786. So, I will keep an eye on these levels for a rejection. Because you could also get a little ABC and it falls to the downside. You're like, there was the ABC. I expected it to go higher, it didn't, and now it started to fall. So I will definitely keep an eye on the 0.786. And there are many examples where a WXY rejected at the 786. The biggest example was this one over here. Let me use this chart. The biggest example was this one over here. And there's been a lot of them inside of this structure as well. But the most obvious one was this one. Okay, W, X, Y in a X in a triangle. I unfortunately deleted this count. Okay, but you basically had your W over there. You had your X in a triangle formed over there, WXY in a triangle, but that's basically your X where it ended. And now you had your A, B, C. Look at where it rejected. So this is what I'm trying to paint out over here on the smaller time frames, is that you could now form your ABC, okay, and reject at the 786. According to theory, the one-to-one extension is the most common, and it can stretch to these levels as well. It's not common to see a Y wave hit the 1.618, but it's not an invalidation, it's a rare target. The minimum target for a Y is hitting the 0.618, just like the C that I've explained. Okay, let's go through some comments, and remember to smash up that like button if you want to be part of the community where myself and Andy do updates. I see Dylan, one of our coaches inside of the community, also posted some nice insights from an altcoin perspective. Okay, some trades that he took. Okay, the first one I wanted to discuss, maybe before I move on, guys, I want to discuss this, but I'm first going to go through some comments. And let me just zoom out here, put myself on the other side. Oops, my face just disappeared. Let me put myself back on. There we go. You guys can see me again. Okay. Dylan always cooking. Yes, for those of you that are in the community, it's not just myself and Andy. Dylan looks at the total 3, the market cap, USDT dominance, and he really likes to trade altcoins as well. So when he's interested in altcoins, okay, he shares those opportunities. I think it's here in the altcoin section. I mean, look at these amazing trades that he has been taking. And all he's doing, guys, is just sharing the trades that he's taking. Okay. Giving updates, ETH update yesterday. Uni, right, total 3. You guys can see it's not just altcoins. He looks at the market holistically as well. He also looks at Bitcoin. Okay, shares the P&Ls for the trades. And I think the beauty about Dylan inside of the community is he takes every single trade. This is the trades that he's taking. When he highlights something, he takes the trades, and if it loses, he shares the P&L. If he makes a win, he shares the P&L. And I actually looked at his spreadsheet the other day. Last week, I looked at his spreadsheet, and his win rate is phenomenally high. Okay, guys, oh, I put myself here on the wrong side. Dylan's win rate is over 70%, 75. Okay, Dylan is an absolute monster. Anyways, guys, what I wanted to discuss now, let's first go through the comments. I'm distracting myself. Let's do this. There we go. Okay, then we'll tell slow down. You're looking at altcoins. Looks bullish, but move very sluggish. Yeah, it's just ranging here at the moment, Mr. Bitcoin. Okay, are you doing good? Awesome. Can you analyze ICP, Devolt? Guys, you know, I really like to focus on Bitcoin during these streams. It is the king of crypto. And if you do have an altcoin request, you can ask me inside of the community, and I'll happily do an altcoin request for you. Okay, please guys, just one per person, because I had people in the past giving me their whole portfolio, all 23 altcoins in their portfolio. Devil, can you please analyze them for me? Guys, I mean, seriously, I also need to trade. I have a life outside of this as well. I can't spend 5 hours analyzing one person's portfolio. Okay, just, you know, if you want a specific altcoin, I'll happily do that, but not your whole portfolio. Right. A 4-hour close below 69 could take us to 68 before possible. Yeah, I think more so tap 90. Okay, cool. Now I deleted because your last statement cleared it very well. Okay, cool. Mr. David Trader. Okay, perfect. Sorry, man. I didn't mean to go off at you. You know, when people make comments, I also like to use that as educational content for everyone to understand. Okay. Right, yes, Dylan is on fire with the trades. Nico, yes, he is definitely on fire inside of the trade. Dylan also does private live streams twice a week inside of the community. For those of you that didn't know, maybe you are inside the community, you don't know, Dylan does 2 private live streams that's not shared on YouTube, where he goes through what he's looking at, his sentiment, you know, is he feeling bullish, is he feeling bearish, what is USDT dominance doing, etc., etc. Okay, so now quickly, what I wanted to discuss, you know, we're in an hour already, so let me just swing myself back to my spot where I feel comfortable. I wanted to discuss just quickly what happened yesterday, because I discussed this yesterday inside of my live stream as well. Okay, so it was here. Okay, let me make myself a little bit smaller. Let me do this so you guys can see the pictures properly. So as price, I spoke about this range low, which is basically, okay, let's zoom into the structure, 5-minute time frame. Okay, the range low. Do you guys remember this trade? Because they do act as nice reversal areas. Okay, let me switch the scenario off so it's not messy. You have your range low, which was over, let me grab my horizontal there. Ding. Okay, so as price was falling here to the downside, price was here, and I said if I see this and this, I will get in with my stop below the low. Okay, and that's what I posted. You guys can see where price was. It wasn't there yet. If I see that, I will attempt a long. This is what I said. If price dips below this range low and gets acceptance back above, I will attempt a long. So I can only share with you how I enter the market. It's up to you. And because there's been times where people will send me a message to say, I don't agree with your analysis. And then I'm just like, well, you don't have to take the trade. I'm just sharing what I'm doing. Okay. Anyways, this is what happened. So I got into the trade, got in, profits taken to cover fees and my stop loss. So here you can see I got in, okay, stop loss at the low, but I already took profits to cover because here my stop loss was $1,422, but I already took $1,600, which means if I get stopped out, I get stopped out with profits. Okay. Obviously what happened then afterwards is price consolidated here on top. I took an additional 15% profits. As price was chopping here, I took a little bit more profits because I didn't like the structure on the 1 minute time frame. it looked bad on the 1 minute time frame. So I just scratched a little bit more profits, and then I got stopped out. That's what happened. Okay, got stopped out of that trade with profits. That's what's important to me. Then I also highlighted to the community, if I get, because I was still in the trade, if I get stopped out, I'll already have my plan to the downside. I highlighted the 0.618 and I highlighted the 0.7. I said, those are the two levels that I'm interested in a long. If I get, you guys can see, I'm in a long, but I already have a plan for if I get stopped out and I want to enter another long. That's how I like to trade, because I know it can rally from here and I make money, okay? Or it falls to the downside and I want to get in again. So I can get stopped out and get back in, okay, again. So I already had my plan. This is my plan if I get stopped out. And then we tapped the 0.618, okay? We got the bounce to the upside. And this is where I shared with everyone this morning that I actually got into that trade, okay, which was basically the level here to the downside. But I didn't sniper this one. I had a different strategy, and sometimes, you know, I can change strategies. For me, it doesn't matter, okay? So this is where price bounced. And as price bounced and it came back, there was bullish CVD. So that is where I entered. So it was just a different way of getting into this trade. I wanted a little bit more confirmation because I knew that price can continue to the downside. But once I saw the bullish CVD, I was like, okay, it has a chance to move higher. This is why my entry is at that little retracement. Can you guys see? Because that's where I got in. At the retracement, if I go onto CVD here on the 5 minute time frame, you'll see the bullish CVD that was forming. Okay, look at that, bullish CVD. So I'm just sharing with you how I got into the trade. You had bullish CVD, got in at the retracement, and now price is where it is. So just quickly wanted to go through what I shared in the community from an education perspective. If you want to be part of the community, okay, I always say this, I know there's a lot of people that jump into the live streams as well. DM me the word access, there's my Telegram, and I'll send you the instructions if you want to be part of the community. Okay, you have to sign up with one of my affiliates, make a minimum deposit, and I'll let you in. There's other ways to get in as well, but I'll send you the instructions if you want further information. Okay, here's all the details. My disclaimers, as always, guys, I'm just a crazy dude on YouTube providing education and how I approach the markets. Okay, it's you need to do your own research. You're in control of your own cash at the end of the day. I can only share with you how I approach the markets, and hopefully you can take some of that and make it your own and incorporate it into your trading strategies. Okay, maybe we could be in an ending diagonal. Yeah, I like wave 4 to be in already. Are you talking about this one? Oops, because I thought about it already, but I don't like to talk about them. Are you talking about this? Are you talking about that? Okay. Who's trying to learn how to flirt? Maybe we could be at an ending diagonal. Okay, for an ending diagonal, if this is going to be an ending diagonal, I really actually only like to talk about ending diagonals once wave 4 is in. So if you have your 1, your 2, your 3, and your 4, this is where I start talking about diagonals. It's too early. And diagonals never carry the highest probability. Okay, no, the lower time frame. The lower time frame. This is the 5 minute time frame. Okay, you mean just zoom in. Ending diagonal over here. This. Well, this is expand. I don't know. Okay, you're going to have to, from the low of 69. From the low of 69. You know, this is the low of 69. I don't see a diagonal in here. I don't. Because it's expanding. Okay, you have to take it from 1, 2, 3, 4, 5. Okay, so maybe what could happen here, that's what I'm saying, it's very early. If it falls and then it goes back up, then, oops, sorry guys, my mouse is stuck. Let's leave it. There we go. Let's take this out the way. So I can't see a diagonal here because it's expanding. It's like, I don't like inside of this structure. There's no diagonal for me. No, after the third wave. You Basso, okay, share with me inside of the community, if you are inside of the community, okay, share with me a picture, because usually what people do is they will go here into the chart or the chat section. Where's the chart talk, and they will share with me their scenarios, okay, and then I can have a look at it. We have some amazing people inside of the community as well. We've got Mr. Joan, we've got Joy, we've got a couple of people here that really know their stuff from an Elliott wave perspective, okay. People can give you advice and some feedback. It's difficult for me to try and figure out what you mean just by reading the comments, because now I'm going to try and figure this out and I don't see it. Okay, the only thing I can see is if price falls here and it does this, now you, sorry guys, my mouse is getting stuck. Then you're forming a diagonal. Okay, then you could be forming a diagonal. Anyways, I've shared in the community. Have you shared in the community? Let's have a look. Let's have a look. There we go. 1, 2, 3, 4, 5. A, B, C. Okay, I see what you did. You're basically saying that this is your impulse. Okay, 1, 2, 3, 4, 5. Okay. 1, 2, 3, 4, 5. Okay, so that's the end of your impulse. This is your correction, and your B, that's what you said. And then A, B, which is, I don't know if it tapped to 0.618. But it doesn't make sense, because your C wave has to be the ending diagonal, or your fifth wave has to be the ending diagonal. Okay, so that count that you've got there doesn't really make sense to me, because now you need to have your, okay, A, B, C. Just want to see if it didn't get invalidated. Okay. There we go. Let's just switch on the flat targets. Oof, almost got invalidated. Okay, so that could be an ABC, and then that could be an A. Now you have an ABC, that could be a B. Okay, A, B, and now you can get your 1, 2, 3, 4, 5 in a C wave to the upside. So you're basically now saying that, okay, from this structure you're forming an ending diagonal. Listen guys, you have to look at everything else first before you consider diagonals. They are rare. Okay, so I always like to tell people, try and count it any way you can, that just from a normal count perspective before you consider diagonals, because diagonals takes low, you know, they don't happen often. So you basically want to see this in a C wave here to the upside. Yes, that can happen, and you basically have formed a corrective structure here. You basically form a corrective structure, and your C wave is now in an ending diagonal, and now you have 1, 2, 3, 4, 5. I would consider everything else before I consider this one. But yes, it does make sense. Okay, but I'm not going to have this as a primary scenario. There's no ways. Okay, but also it doesn't matter what structure for me. Okay, this is why I don't have to count the 5-minute time frame, for example, here, and consider an ending diagonal. I don't have to do that, because I have my levels marked out. I know exactly from where I want to short. Okay, so back on the 15-minute time frame, I know, based on all the analysis that I've done over the last hour, I know exactly where I'm looking for shorts in that zone. So I don't care how price gets there. I know where to look for the short. Okay. Remember to smash up that like button if you do enjoy the education. I have unfortunately run out of time. Thank you so much for joining the live stream. If you are inside of the community, I'll provide more updates during the day as price develops. If I do get stopped out of my short, okay, if I do get stopped out of the short that I'm in at the moment, I will share with you if I do jump into a new short. Okay, and where I'm going to jump into that short, how I'm going to manage my risk. Hopefully, if I'm wrong, I'll get stopped out with profits. And have yourselves an amazing trading day. And then I will see you all in the next one. Cheers for now.